Happy Friday, everyone. Hope you all are ready for the weekend. My AIS students not ready for the weekend because they got an exam coming up on Monday. So, you can pity them and sympathize with them. If you know anybody about AIS, you can kind of stand around them and just basically say, yeah, it'd be nice not to have to do anything on Monday. Don't rub it in too hard. You guys remember what it was like. You remember what it was like having to prepare those UML diagrams. Yeah. Am I bringing up horrific thoughts? Yeah. Those multiplicities. Yeah, should rub it in. All right, so we have some homework to talk about today. Let's get at it and then we'll get done and we'll be out of here. What do you say? That sounds good. Which is the best part? The homework part or the getting done part?
Obviously.
It depends. Perfect answer. All right. Sarbanes-Oxley Act 2002 requires management to include a report on the effectiveness of ICOFR in the entity's annual report. It also requires auditors to report on the effectiveness of ICOFR for large public companies. Which of the following statements concerning these requirements is false? All right. So let's just go through them. What do you say? Sounds like a good approach. The auditor should evaluate whether internal controls or financial reporting are designed and operating effectively. Is that a true statement? That is, in fact, a true statement. Both of those components are really important. Management reports should state its responsibility for establishing and maintaining an adequate internal control system. Is that a true statement? Yeah, that's something we talked about directly. Yeah, specific. Management should identify material weaknesses in its report. Yeah, that's kind of an important point. If they were going to take responsibility for it, they should probably say, well, this control was not operating properly, which that this is a should, and not necessarily all management will do that, because that's why we have the auditors to check up on the management. But management should do that. The auditor should provide recommendations for improving internal control in the audit report. Is that a true statement? It is not. It's the only one that's left, so that has to be a false statement. Do they provide recommendations on improving internal control? Yes, they do. Who do they provide that to? To management, not in the report. Okay. All right. Question 720. A control deviation caused by an employee performing a control procedure that he or she is not authorized to perform is always considered a what? Now, I personally love questions like this because this is an absolute question, which you don't get a lot of that in this particular course. We get a whole lot of these most likely questions, but this is an absolute question. So we get pretty easy identification. So we know that it can't be significant deficiency or material weakness because those are judgments of magnitude, and the magnitude can vary, so it's not going to be an always criteria. So it has to be deficiency in design or deficiency in operation. Let's make sure we're clear on those. Deficiency in design is basically saying the control is not present or it's not correctly developed, not correctly implemented. Deficiency in operation says the control is there, it functions properly, it should function properly, but for some reason is being ignored or bypassed. Okay, it is not working even though it's been designed properly. So which of these is being described here in this particular question? Design or operation? Operation, yes. So B is our answer. Question 723. Which of the following controls would most likely, there we go, we're back at most likely again, most likely be tested during an interim period? So before we answer this question, let's go ahead and think about what would be the nature of something we want to do in an interim period. This is kind of a reflection of something that we talked about back in chapter 6, but why would we test controls during an interim period if we're concerned about, or what would be the criteria we want to look at? Well, the whole word justification for testing controls in interim is that the controls are not likely to change over time. So this answer, we're looking for an answer that basically reflects that, where controls are relatively static, they're fairly stable. Okay, so keeping that in mind, controls over non-routine transactions. All right, well, if it's non-routine, that means the controls themselves probably have to be in flux a little bit too. Controls over the period in the financial reporting process. By definition, those controls relate to what? The end of the period, the final part of the audit. Okay, so that's probably not a good interim test. Controls that operate on a continuous basis. What does that tell us? The controls are doing the same thing over and over again. So this is likely our answer. Controls over transactions that involve a high degree of subjectivity. What does that term subjectivity means? Yeah, judgments. Yeah, it can change. It's basically dependent on who it is that's making the decision. Okay, subjectivity is one of those things that changes different perspectives, and that's the case. Controls are going to be very specific in how we approach them. So we probably want to wait until the period end to look at those. So C is going to be most likely our answer. I think it's the clearest answer there. All right, question 728. In auditing a public company, Natalie, an auditor for NM Neal Associates, identifies 4 deficiencies in ICOFR. 3 deficiencies are unlikely to result in financial misstatements that are material. One of the deficiencies is reasonably likely to result in misstatements that are not material, but significant. So let's just go ahead and clarify, categorize these, okay? Because this is an important point. We're talking about these first 3 deficiencies. How do we categorize those? They are deficiencies, so they're going to be categorized as what type of deficiencies? These are control deficiencies, okay? These are just basic control deficiencies. That's all there is. They're likely to happen, but they're not significant nor material, all right? And then we have one that's likely to result in misstatements, but it's not material, but is significant. By definition, that's not going to be a material weakness. That's going to be a significant deficiency. Good, okay? So let's just ignore the significant deficiency for the time being. If it was just control deficiencies, what is our report going to be? Unqualified, okay? Unqualified. These are minor issues. That's the dust in the corner that we talked about. Remember that analogy that I've never used up until this semester for some reason, but I think it's a pretty good one, so I'm going to continue using it. Yeah, there's dust in the corner. We don't really care about that. It's not really enough to affect the operations or the judgment of the auditor. Now, significant deficiencies, that's a breaking point. Now, how do we define significant deficiencies? What was my analogy for this particular point? Something that is not a problem now, but is likely to become a problem in the future. Remember my big blue van, you know, the one that I did put oil in? That's a true story, by the way. I am exposing my past to you all for purposes of learning, okay? All right, I'm taking the embarrassment on. Did you know Dr. Barnes broke a van? Yeah, it's true. I did. Okay. But that alludes to a really important point. Is it a problem right now? No. Are we concerned right now about right now? Yes. So it's not enough to create a problem right now, meaning that it's still going to be an unqualified opinion. Now, is this something that's going to be relevant to auditors in the future? Are we going to look back and say, hey, we had this significant deficiency last year. Did you fix that problem? If you didn't fix that problem, it may now be a material weakness, okay? So it's still something that we want management to correct, and that's why we tell audit committee about it. But it is not enough to result, it's not likely to result in a material misstatement, just a significant issue, okay? So that's why we say it's still an unqualified report. So A is our answer. Which of the following statements concerning control deficiencies is true? All right, so I'm going to work with the last one, but let's just vary things up. No particular reason. I'm going to go from D and move back to A, okay? So an auditor must immediately report material weaknesses and significant deficiencies discovered in an audit to the PCAOB. Boy, that sure sounds like critical mass right there. It's like PCAOB wants to know this information. Well, no, we report externally, but we don't report directly to the PCAOB. We report it in the audit report, and material weakness is the only thing we report. So that's important. All control deficiencies are significant deficiencies. So remember, control deficiencies, those are the bottom, those are the small problems, the not big issues. Significant deficiencies, by definition, are control deficiencies that are larger, and the material weaknesses are larger than that. So it's the other way around. It's like control deficiencies is the big oval, significant deficiencies is kind of this middle oval, and the material weakness is small oval. So yeah, doesn't work out. Same thing is true for significant deficiencies. All material weaknesses may be significant deficiencies, but not all significant deficiencies are material weaknesses. That leaves us at A. The auditor should communicate to management in writing all control deficiencies and internal control identified into the audit. That is a correct statement. A is our correct statement. And when we talk about control deficiencies being communicated, it does not matter to the scale. It doesn't matter if we issue an unqualified opinion. We're still going to report anything that we find is problematic to management, saying, you should fix these. That's just generally a good idea, all right? That may prevent problems from occurring in the future. That's chapter 7. Let's move on to chapter 8, multiple choice. Samples to test internal controls are intended to provide a basis for the auditor to conclude whether what, okay? So what is the goal of sampling? Remember that whole idea of gaining enough assurance that we can be fairly confident in our assessment. That confidence level idea that we're going to be 95% confident or 90% confident, but that aligns with something we talked about much earlier in this course. Something about assurance. I forget what it is. Maybe you can remind me. I'm really old, so you're gonna have to remind me. What is that? Absolute assurance. That's it. That's right. That's what we're going for, right, guys? Yeah. Well, that'd be 100%. It's not absolute assurance. You guys are misleading me. What is it? Reasonable assurance. Reasonable assurance. Yes. Okay. So what do we want reasonable assurance about? Well, we start out with A, the controls are operating effectively. What do you guys think about that? Yeah, that sounds pretty good to me. I think A is our answer, but let's go with the rest of it. Okay. Financial statements are materially misstated. Okay. Do we test controls to get information about the financial statements? Not directly. The controls testing might give us information about the financial statements, but those are two separate tests. The risk of incorrect acceptance is too high. No, sampling for test and internal controls is going to occur after we assess control or the risk of incorrect acceptance. That's our audit risk. And the materiality for planning purposes is sufficiently low level. That has nothing to do with controls. Okay, materiality is not what we consider with controls. Materiality is testing of account balances, which, as we all know, because we all remember stuff from chapter 5, testing of account balances occurs during what phase of the audit? Planning and risk assessment, right? No. Test of controls, right? No. What is that last phase? Substantive procedures. Substantive procedures. Yes, substantive procedures. Yes. Okay. We all knew that, right? You were just nodding your heads because you were just really, really enthusiastic about what I was saying. Yeah. Okay. I appreciate that. Enthusiasm is palpable. All right. 814. Which of the following combination results in the greatest decrease in sample size and attribute sample set for tested controls? All right. So let's just go through each of these one by one. So confidence level. Confidence level directly related to sample size or indirectly related to sample size? Be directly. Yeah, if the confidence level goes up, we need a higher, bigger sample. If it goes down, we need a smaller sample. So which would result in the greatest decrease in sample size? A decrease in confidence level. So we've got three options for a decrease. So we eliminate B. Tolerable deviation rate and expected population deviation rate. Now, these directly speaking, these do not individually affect it, but it's assuming that one does not change and the other does change. So tolerable deviation rate, we would want to increase the distance between expected population deviation rate and population deviation rate for a decrease in sample size. So which direction would tolerable deviation rate have to move, holding expected population deviation rate constant? It'd have to go increase, okay? So it's going to have to be an increase, all right? It's going to have to be an increase, which just leaves us C and D now because we eliminate A because it's decrease. So the expected population deviation rate, which direction would have to move for that distance to increase? It'd have to go down, so we have to decrease. So decrease, increase, decrease, C. Everybody understand that, follow that? Everybody answer C? Everybody's just like, I'm on this, Dr. Barnes. Yeah, okay. All right, happy to hear it. All right, 819. Assume an auditor is evaluating a statistical attribute sample of 50 items. I remember this question. I love this question. That resulted in 3 deviations. What should the auditor conclude if the tolerable deviation rate is 7%, the expected population deviation rate is 5%, and the allowance for sampling risk is 2%? Well, there's a lot going on here, isn't there? Okay. So let's go ahead and answer the question before we look at the answers, because we're going to have to find an answer that's most consistent with what our expectation is. So first of all, what number is our comparison basis? Like, what do we say? Okay, it cannot exceed this percentage. If it does, everything's off. What is that called? Tolerable deviation rate, which we know is 7%. Now we need to establish what we're going to compare it to. Now we know that we want to compare it to the upper error limit, the upper deviation rate, the upper deviation rate. But what is upper deviation rate? Some number that statisticians make up. Okay, some number, that's actually a true statement. Some number a statistician makes up. But what are the components? Well, the first component is the sample deviation rate. What is the sample deviation rate up here? Doesn't seem like it's explicitly given the problem. It doesn't say sample deviation rate anywhere in the problem. Are we intelligent enough as individuals that we can suss this out? Yes, we are. Okay, I have confidence. I believe in you all right? So yes, sample deviation rate is just the number of deviations in the sample, all right? The sample was 50, the number of deviations was 3. 3 divided by 50 is 6%, 6%, okay? So our sample deviation rate is 6%. Then we're gonna tack onto that allowance for sampling risk. Remember, because we said that the actual deviation rate in the population is somewhere around 6%, but it could be somewhat greater and something lesser. We were concerned about the highest possible limit, the highest error limit. So we're going to add on 2 more percent. So 6% plus 2% is 8%. 8% is greater than 7%. Therefore, we reject that the control is operating effectively. Now that we've sussed all that out, which of these answers best represents that explanation? Let's look at D. The planned assessed level of control risk should be modified because the sample deviation rate plus the allowance for sampling risk exceeds the tolerable deviation rate. That match my exposition that I just went through just a little bit ago? Hope so. I don't want to go through another answer. Okay. But yeah, D is our answer for that reason, that explanation that we gave. All right. Chapter 9, multiple choice. Which of the following sample methods would be used to evaluate a numeric measurement of a population such as a dollar value? So we only talked about two types of sampling, two general categories of sampling. We talked about attribute sampling, and what is attribute sampling used for? Test of controls, okay? Remember, attribute sampling is looking for a particular characteristic. Does the characteristic exist? Yes or no? All right, that's why it's a test of controls. Then if we're talking about using as a test for balance, what was the other category of sampling that we talked about? Variable sampling. And remember, variable sampling is using to extrapolate what the misstatement is in the population based on the misstatement in the sample. So if I say there's a $50 misstatement in my sample, and my sample is 1/10 the size of the population, I extrapolate it to be roughly $500. It's not exactly $500, but it's some magnitude of order around that amount. Okay, for the same reasons we talked about with attribute sampling. So variable sampling, D. All right, last multiple choice question. How would increases in tolerable misstatement and the assessed level of control risk affect the sample size in substantive tested details? We'll just do the same thing we did before. Let's go through both of these individually. So if I increase my tolerable misstatement, how do you feel about that? Let's say you increase your tolerable misstatement in an account. Is that a bad thing or a good thing? It's a misstatement, Dr. Barnes. It's a bad thing. Bad thing. No, we like large tolerable misstatements. It means less work. Okay. How does that translate to sample size? If you say less work, does that mean fewer or lower sample size or a larger sample size? A smaller sample size. We're going to decrease our sample size. So it's either A or B. If I increase the assessed level of control risk, all right, there's a big one. Okay, so I increase the assessed level of control risk. Do I want to be more or less certain if I increase the assessed level of control risk? Well, if my control risk is lower, then that means that I don't need to do as much testing as substantive testing. So if control risk is higher, it means I have to do more testing. I'm gonna have to increase my sample size. So decrease sample size, increase sample size, B is our answer. All right, going back to chapter 7. Now, just as a reminder, these questions are fine. We're gonna have some discussion on these questions. I do want to reiterate something that I said about these types of questions. There will definitely be questions like these on the exam, but the questions on the exam will not just be limited to significant deficiencies and material weaknesses. They will actually cover all possibilities. So that includes control deficiencies, significant deficiencies, and material weaknesses, or if there's not a reasonable likelihood, none of the above. Okay. These are one of those rare times that I will use none of the above, and I think it's a valid response simply because there's a possibility that it's not a deficiency. Okay. I don't even know if I use the term none of the above, but it's effectively none of the above. So, all right. So these were going to be limited to significant deficiency or material weakness. So let's go ahead and talk about this. So entity uses a standard sales contract for most transactions. This is this 50% speed right here. Okay, I'm going to be talking at 50% speed, which is for me is 200%. I'm going to go twice as fast as I normally do, and you're going to have to slow it way down. Individual sales transactions are not material to the entity. Service personnel are allowed to modify sales contract terms. The entity's accounting function reviews significant or unusual modifications, but does not review changes of the standard shipping terms. The changes of the standard shipping terms could require delay in timing of revenue recognition. Management reviews gross margins on a monthly basis and investigates any significant or unusual relationships. In addition, management reviews the reasonableness of inventory levels at the end of each accounting period. The entity has experienced limited situations in which revenue has been appropriately recorded in advance of shipment, but amounts have not been material. Very obviously what? Very obviously something, Dr. Barnes. We're really afraid if we give the wrong answer that you're going to throw us out of class. Actually, that may be a benefit, because if I throw you out of class, then you get to start your Friday early. Isn't that right? Well, that's right. I wouldn't throw you out of class. There's too much learning to be done. Too much learning to be done. What is our answer here? Significant deficiency. Yeah, significant deficiency. What are the clues? The obvious one is that it's not material, okay? Either material individually or in aggregate. Also, we note that the control itself is failing, but there are redundant controls that are kind of checks against that. So that's a big clue that it's significant deficiency because there's opportunities to catch the problem a little bit later on. So A is very much like our example that we talked about in class, and so we're going to anchor on that one. The entity has a standard sales contract, but sales personnel frequently modify the terms of the contract. Darn those sales personnel. Okay. Is anybody a salesperson in here? If so, don't do that. It's a bad idea. Okay. The nature of the modifications can affect the timing and amount of revenue recognized. Individual sales transactions are frequently material to the entity. The gross margin can vary significantly for each transaction. The entity does not have enough procedures, in place for the accounting function to regularly review modifications of sales contract terms, although management reviews gross margins on a monthly basis. The significant difference in gross margins on individual transactions make it difficult for management to identify potential misstatements. Improper revenue recognition has occurred and amounts have been material. Well, if A was obviously significant deficiency, this is obviously material weakness, okay? For all the reasons that we said that it was a significant deficiency of the first one, the second one is material. both individually and in aggregate, okay? And it does not appear that they have any redundant controls to address the problem, okay? So the sales personnel are up to shenanigans, and this one's a material shenanigan. All right, sales or any has a standard sales contract, but sales personnel frequently modify the terms of the contract. Sales personnel frequently grant unauthorized and unrecorded sales discounts to customers without the knowledge of the accounting department. These amounts are deducted by customers paying their invoices and are recorded by outstanding balances in their accounts receivable aging. Although these amounts are individually insignificant, when added up, they are material and have occurred regularly over the past few years. Ooh, we have a different one here. We have a kind of split decision here. All right. I'm going to ask you all right? This is one of those times I'm going to force you guys to raise your hands. And if you don't raise your hand, I'm going to call you a coward. And actually, I won't do that. Name calling is not cool. Name calling is not cool. Just know that if you raise your hand, what I'm really thinking in my head, okay? What I'm really thinking in my head. So how many people think this is a significant deficiency? How many people think this is a material weakness? I'm going to agree with you all. I think this is material weakness, okay? In aggregate, I think this is a problem. Even if we're talking about individual transactions and is not being significant, the aggregate is going to be problematic. And the fact that it occurs fairly frequently is just kind of icing on the cake. So yeah, I'm going to go material weakness, and very proud of everybody for taking a stand on that one. Very proud of that one. Although I'm curious, did anybody just think, okay, I'm going to wait and see if anybody raises their hand for significant deficiency. If it's like most of the class, I'll do it. And then nobody raised their hand on significant deficiency, so everybody just defaulted to material weakness. Was that the strategy? If it was, very clever. Okay, very clever. All right, 736. Following examples, I don't need to read that. During its assessment of ICOFR, management of Lawrence Company Corporation and its authors identified the following control deficiencies that individually represent significant deficiencies: inadequate segregation of duties over certain information and system access controls, several instances of transactions that were not properly recorded in subsidiary ledgers, while transactions were recorded properly were not material. The gross amount of the transactions that type that control totaled up to several times materiality. A lack of timely reconciliations of the account balances affected by the improperly recorded transactions. So before we answer this question, are these related issues? They're individual control issues, but could we say that there's some sort of relationship in these? Like, if there was effective controls in one area, would it actually have some sort of impact on some of the other areas as well? I think so. I think if we said that that one of these controls was effective, it might actually defer or deter action in another area. So the fact that these are kind of compounding problems may affect our answer. So if that's the case, what am I leaning towards? We already know that these are least significant deficiencies, but the combination of them, can we make an argument that the combination of them could be a material weakness? Yes, I think that's a pretty easy argument to make. This is a little bit more subjective than the other ones. We don't have as much detail. It's not as obvious, but I would be leaning more towards saying the problems themselves combined would amount to to material weakness, particularly with this note that says that the gross amount of the transactions added up to several times materiality. So individual transactions not a problem, but it seems to occur so frequently that we have a major issue. All right. During its assessment of ICOFR, management of First Bank Corp and its auditors identified the following deficiencies that individually represent significant deficiencies: the design of controls over estimation of credit losses, a critical accounting estimate, the operating effectiveness controls for initiating, processing, or reviewing adjustments to allowance for credit losses, and the operating effectiveness controls designed to prevent and detect improper recognition of interest income. In addition, during the past year, First Coast experienced a significant level of growth in loan balances are subject to controls governing credit loss estimation and revenue recognition, and further growth is expected in the upcoming year. So we have another similar problem. We've got series of control deficiencies that individually by themselves represent significant deficiencies. And if it was just one of these, we could say it's a significant deficiency, fix this problem before it becomes a material weakness. But are these related issues? Yeah, these are related to the all of the same thing about the recognition of income and the credit losses. So these are all related topics. So kind of leaning on what we said in the previous problem, we're going to lean towards this idea of it being material weakness. That being said, is there any other information in this problem that kind of gives us a boost into that material weakness realm? What do we know about the nature of this organization? Is this organization just kind of stable? The industry is not changing. They're not growing very much. There's not a lot of adaptivity. No, they're growing. They're growing. What does that mean about the severity of this area? It becomes a lot more prominent over time because this organization is growing. And so the loan balances, there's significant level of growth in loan balances in those loan balances. So basically the area that we were concerned about the controls has a lot of growth in the past year, and it's going to grow in the current year. So even if we want to identify, saying individually these are significant deficiencies, it is almost likely these will become material weaknesses in the current year, and combined together, they represent a problem that is likely in aggregate to result in a material misstatement. This is the least certain I am on any of these, but I'm going to go with material weakness on this one. Okay. By the way, if I ask you this type of question on the exam, I said, okay, evaluate what type of deficiency it is. Could you answer significant deficiency and still get full credit? Yes, but you would have to articulate that clearly as to why that's the case. Okay. That's because that's when we have these issues. You notice the level of subjectivity increased with these questions. And so when we get to questions like this is a matter of judgment on the part of the auditor. And so that's what I'm looking for questions like that on the exam. We're almost done, guys. We got one more series of questions. So remember I told you that we're going to be doing some questions again on how to identify these. So you had to do some sample sizes and some sample size testing and then determine if the controls were operating effectively. So I'm not going to read through the problem, but basically in 825 and 826, you have to determine the sample size, and then you have to determine whether or not the controls were effective based on this information. So hopefully everybody referred back to this attribute sampling table. We're able to identify everything they need to identify. So let's just go ahead and debrief since everybody completed this problem. What's our sample size for the first control procedure? So 5% risk of incorrect acceptance, which means confidence level of 95, okay. Tolerable deviation rate of 4 and expected population deviation rate of 1. So what is our sample size in the first one? 156. Does everybody agree with that one? All right. Okay, that's good. That's the number I have. All right. So moving on, we have question control procedure, similar situation, 95% confidence level because there's risk of incorrect acceptance of 5%, tolerable deviation rate of 5% and 2%. Now, before we reveal the answer, what do we think the sample size is going to be? Is it going to be around the same amount? I mean, subjectively speaking, and there's going to be some deviation, but do we think that it's probably still going to be in this range? I don't think it's going to drop below 100. I think it'll probably still be above 100, and I think it'll probably be roughly the same. So what do we got? 181. Yeah, 181. Okay, so statistically speaking, not a massive difference, but enough that we note. All right, moving on to the next question. 10%, 7%, 3%. 10% means a change in confidence level to what? 90. Okay, so 90%, 7%, 3%. What's our sample size? 94. All right, same question as before, except we now have tolerable deviation rate of 8%, 4%. Same idea as before. We're not really changing the distance here that much, so we may have a small change in sample size, but it's going to be very close. What'd you all come up with? 91 or 98, sorry. I don't know why I said 91. I was really excited about the number 91 for some reason. So let's go ahead and just drop these sample sizes down here. So 826 says we're going to calculate the sample deviation rate first, then our computed upper deviation rate. So sample deviation rate should be pretty straightforward. What do we do to sample deviation rate? We divide the number of deviations by the sample size. So let's do the easy one first. What is 0 divided by 156? Seems a lot of confidence in that particular answer, but I agree with you. Okay, I have percentages here. I can't believe it. Yeah. All right. What about 5 divided by 181? 2.8. 4 divided by 94? 4.3%. And then 3 divided by 98? So 3.1%. So computed upper deviation rates. Now, this is one where you had to go look in the tables here. The second set of tables. So remember, these are going to be listed on there. So yeah, we're going to say actual number of deviations found. So let's just go ahead and do first one as obvious. So we said 0. I believe we said 156. So we're going to say 150. So 2.0. Is that what everybody came up with? See if I put percentages on this one. Nope, I failed. Okay. All right. Yeah. Yeah, I just can't believe it. Yeah. You've let me down, Dr. Byron. Yeah. I let myself down way too much. Yeah. So no, so let's go ahead and talk about this. We had 0 deviations in the sample. So why don't we have a expected population deviation rate of 2%? Because we're probably going to expect some deviations in the sample. This is saying, look, it's probably around 0, but at the top end, we could have as much as 2%. And this is a pretty large sample, so it doesn't vary that much. It's actually pretty small expectations. So that 2% is pretty good. Now, we're going to compare this to our tolerable deviation rate of 4% and our computed upper deviation rate of 2%. Let's just go ahead Oh, that's awful. No, forget that. Forget that. I'm just gonna type in 2%, see what happens. There we go. Okay, there we go. I'm not gonna do that for every one of them, but I'll do that for this one. So 2% is less than 4%, which means what? Is the control effective or not? It is effective. Yes, the control is effective. All right, let's go ahead and do our deviation rates for the rest. What about for control procedure number 2? What's our computed upper deviation rate? I got 6.9, so because I went on the little one. So it depends on what you identify. So there were 4 deviations, is that right? Hold on. 5 deviations. So 5 deviations. So yeah, it was somewhere between 6.9 and 5.2. Now, the difficulty here is that you want to go with the one that's closer to it. 200 is definitely closer than 150 for 181. But again, we want to operate on the most conservative estimate possible. So we're going to say 7.8. Now, did anybody run these through IDEA just for posterity and just say, I wanted to, it's like, okay, good, Doran. So yeah, come up with any different answers here? Oh, just idea. Yeah. So it's good to experience a little bit of both. But either way, I think we're going to come up with not effective. Okay. It doesn't really matter which one you use because they both end up being above a tolerable deviation rate of 5%. And that's true for whichever table number we used, or if we used IDEA in the situation. All right. What do we come up with the deviation rate for this one here, number 3? 8.7. Again, going for a conservative estimate, so we're going to use our sample size as 90. Okay. And then 8.7, compare that to 7%. That's going to be not effective. All right. Last one. Last one for the day. Last one for the weekend. Yeah. All right. We got number 3. What is our sample size going to be? Again, 98. We could operate either on 100 or 100 or 90. We want to be more consistent and more conservative. We're going to operate at 90. So we're going to say 7.3. Which means that a tolerable deviation rate, this is still effective. Okay. So effective, not effective, not effective, effective. How would you feel about if you're your auditor, you're testing controls and half your controls failed? You should have to have a bright side of life philosophy. It's like, well, they're doing halfway good. You know, it's like, yeah, I would be a little bit disappointed. It's not all bad, but it's mostly, it's 50% bad, 50% bad. It's like eating half an apple and the other half has a worm. The worst part is when you eat an apple and it has half a worm in it. Think about that. Have a good weekend.